What's up, guys? How you guys doing today? This video talking about candlesticks trading Bible. So what we left off, I talk about some candlesticks, right? And now I'm going to go in depth about candlesticks. So introduction: candlesticks trading Bible is one of the most important trading, most powerful trading system in history. It was invented by Homer Musashi, the father of candlestick chart patterns. The trader is considered to be the most successful trader in history. He was known as a god of markets in his days. His discovery made him more than 10 billion in today's dollar. I've spent 10 years completing testing, organizing, and constantly updating this method to create my own new version, which is considered to be the easiest and most profitable trading system. Candlestick trading Bible is the trading method that is going to finally take your trading to where it should be consistent, profitable, easy, and requiring very little and effort. It's little time and effort, right? So let's continue. This trading system is based on Japanese candlesticks pattern in the combination with technical analysis. I hope you know what's technical analysis. We'll get into that bit by bit. So all you have to do is to spend much time as you can master the method that I'm going to share with you and use it to trade any financial market. Any financial market, that means any candlesticks you see, any power stocks, um, forex, indices, any financial market. So candlesticks are very, very important. Learning Japanese candlesticks is like learning a new language, right? Imagine you got a book which is written in a foreign language. You look at the pages, but you get nothing from what is written. The same thing, the same thing when it comes to financial market. If you don't know how to read Japanese candlesticks, you'll never be able to trade the market. So candles are very important. It's like a language learning to study about the market, you know. So Japanese candlesticks are a language of financial market. If you get the skill of reading charts, you will understand what the market is telling you. You'll be able to make the right decision in the market in the right time. So the easy to follow strategies detail in the work will provide you with profit making techniques that will be quickly earned. You know what I mean? So more importantly, learn the principle of market psychology and aligning the candlesticks methodology will change your overall trading psychology forever. The candlestick trading Bible has already proven itself fortune have been made using the Japanese candlestick strategies. I congratulate you on the first taking step in trading education. On the right path to become a better trader, right? However, this is actually just the beginning of a trading career. After finishing this ebook, the real work begins. Don't read this ebook very fast. This is not a novel. You should take time to understand all the concepts I discussed. Take a note and go back from time to time to view strategies and share with you. Remember, this is an educational work that will teach you professional methods on how to make money trading financial markets. If you got the skills that I share with you here, it will change completely your life and the life of people around you. So let's continue, guys. Overview. The ebook is divided into following sections. Candlesticks autonomy. Just as human beings, candlesticks have different body size, and when it comes to trading, it's important to check out the bodies of candlesticks, understand the psychology behind it, and that's what you will learn in the section. 2. Candlesticks pattern. Candlesticks patterns are just an integral part of technical analysis. Candlesticks patterns emerge because human actions and reactions are patterned and constantly repeated. In this section, you will learn how to recognize the most important candlesticks pattern, the psychology behind its formation, and what they do indicate where they form in the market. Market structure. This is one of my best. I like market structure. In this section, you will learn how to identify trading markets, ranging markets, and choppy markets. You will learn how these markets move and how to trade them professionally. You will also learn how to draw support and resistance and trend lines, time frames, up and down analysis. Multiple time frame analysis is very important for you as a price action trader in this price action trader. In this section, you will learn how to analyze the markets using top-down analysis approach. 5. Trading size. 5. Trading strategies and statistics. So in this part, you can actually pick a strategy that you get used to it every single time because learning always not going to make sense. Just choose one and learn from it. In this section, you will learn how to trade the market using 4 price action trading strategies: pin bar strategy, engulfing bar strategy, inside bar strategy, the inside bar force breakout strategy. Choose example. I recommend you to master the previous section before jumping to this section because if you don't master the basics, you will not be able to use strategies as effective as it should be, right? Try and master, take our time, we're not rushing, right, guys? Make sure that we're learning this thing bit by bit so that we can actually get the best information from it, all right? In this section, you will learn how to identify high probability setups in the market and how to use this candlesticks pattern in the trading market and ranging markets to maximize your profit. 6. Money management is the most important because if you can manage your money very well, there's no way you're going to be profitable, you know. In this section, you learn how to create a money management and risk control plan that will allow you to protect your trading capital and become constantly profitable, right? So, say issue of candlesticks, and talk about this one too much, but it's necessary. Why candlesticks are important to trading analysis? We said already that candlesticks is like a language you learn to read the markets with, anything I study in this life, there's a language to it, there's a pattern to it. So to learn something is like trying to get the language in which it speaks. If you get what I mean, currency is a language of a market. So currency are important to trading analysis because it is considered as a virtual representation of what's going on in the market. By looking at the candlesticks, we get valuable information about the open, high, low, and the close price. We give us an idea about the price movement, right? Candlesticks are flexible. They can be used alone or combination with technical analysis such as tools, moving averages, and momentum oscillators. They can be used also methods. I don't actually use indicators to trade because I don't actually like indicators. I like market structure, to be honest. For me, I'm talking to me, but basically, let's just continue on this what we're saying. I personally use candlesticks to support and resistance, trend lines, and other technical tools that you discover in next chapters. The human behavior in its relation to money is always dominated by fear, greed, hope. These are things. Fear, greed, and hope are something that is a human nature. So to get rid of this is very difficult. Even me, I battle with it, but I try to watch or try to see if I'm actually feeling this greed or fear in my strategy. I try to make sure that I don't feel it, if you know what I mean. Try to make like I'm emotionless, try to make it the right way to trade, Analysis analysis will help us understand these changing psychology factors by showing us how buyers and sellers interact with each other. If you know what I mean. Analysis provide more valuable information than bar charts, Using them is a win-win situation because you get all the trading strategies, trading signals, you know, and that bar chart generated with additional clarity and additional signal generated by candlesticks. You know, Candlesticks are used by most professional traders, banks, hedge funds. These guys trade millions of dollars every single day, every day. they can move the market whenever they want, if you know what I mean. So banks, hedge funds, professional traders, they use the market, they trade it every single day. They can take your money easily if you don't understand the game. Even if you can trade 100,000 trading account. If you can't move the market, you can't control what's going on in the market. Using candlestick pattern will help you understand what the big boys are doing, and will show you when to enter, when to exit, and when to stay away from the market. Right. So my last video I talk about candlesticks. So the the body, the real body, the eye close, open close. Talk about this tiny bit, it's the wicks. So right guys. So I want to talk about long versus short. Long bodies refers to strong buy or selling pressure. If there is a candlestick in which the close is above the open with a long body, this indicates the buyers are stronger and they are in control of the market during this period of time. Conversely, if there is a bearish candlestick in which the open is above the close with a long body, this means that the selling pressure controls the market during the chosen time frame. Short and small bodies indicate a little buying or selling activity. Short, long bodies, these are short bodies, these are long bodies, if you know what I mean. So short and small bodies indicate little buying or selling activity. So you have long shadows, long upper shadows, and you have long lower shadows, if you know what I mean. It's a part here I was looking at, saying upper shadows, right, signifying the session of high, lower shadows signify the session of low, right? You see, if a Japanese candlestick has a long lower shadow in the upper shadow, this means that sellers flash their watch board apps and force price lower, but for one reason or another buyer came in and drove prices back up to the end, session back near its open price. So candlestick patterns, right? These are patterns I have to talk about as well, but I don't go much in this, but let's just read the most important paragraphs I want to show you guys because I've been going through this as well. I personally trade candlestick patterns for more than 20 years. I can really switch to another method because I've tried thousands of strategies and trading methods with no result, if you get what I mean. So candlesticks are very important. It gives you so much results. I'm going to show you I took a trade as well, make a win from that trade from last week, you know. So this skill will help you better enter and exit the market in the right time. In other words, this will help you act differently in the market and make money following the smart guy footprint, if you know what I mean. So candlestick patterns and that I'm going to show you here are the most important patterns that you will find in the market. In this chapter, I'm going to show you how to trade them because this will explain in detail in the next chapters. Right. So what if I show what I want you to do is to focus on the autonomy of the pattern, right? The psychology behind this formation because it will help you to get the skill to identify easily and any pattern you find in the market. Understand what it tells you to do next. So I told you that kind of is like a language. It tells you what can happen next in the market. So if you can get this skill, you will be ready to understand the market, ready to understand and master the trading strategies and tactics that I'm going to teach you in the next chapters. So, right guys, is the first engulfing bar candlestick pattern. The engulfing bar is a test in which it's a test, sorry, the engulfing bar as it states in the title is formed when it's fully engulfed the previous candle. Engulfing bar can engulf more than one previous candle, but to be considered as an engulfing bar, at least one candle must be fully formed, consumed. The bearish engulf is one of the most important candlestick pattern, right? Candlestick pattern consists of two bodies. The first body is smaller than the second one. In other words, the second body engulfs the previous one. See the solution. So it's a bearish engulfing bar. So this this black is looking bearish, right? It's a buy. So this is engulfing this one. That means bearish is engulfing the sell is engulfing the buy candle. So it's like the open price, closing price, smaller bodies. The smaller body is a buy, and the bigger body is a sell. I will call it bearish engulfing bundle, right? So this is a bearish engulfing bar pattern looks like on our chart. This candlestick pattern gave us a valuable information about the bulls and the bears in the market. So in the case of bearish engulfing bar, this pattern tells us that market sellers are in control. When the pattern occurs at the end of an uptrend, it indicates that buyers are engulfed by sellers, which signals a chain reversal. See, for example, bearish engulfing bar. See what happened. After it's engulfing, the market just went down, showing that the market is going to go down. That means that the sellers are in the market. So this is what happens. It's like reading the market, right? So as you can see, when the price action of pattern occurs in an uptrend, we can anticipate a trend reversal because buyers are not still in the control of the market and sellers are still trying to push the market to go down. You can trade any bearish candlestick pattern you find on your chart. You will need other technical tools to confirm your entries, right? We will talk about the details in the next chapter. Right now, I just want you to go open your chart and try to identify all the bearish candle patterns that you will find. All right, cool. Let's go and identify them, right? I took a trade on this AU entity, but I took a loss on this. I'm cool with that because why? I saw a gap here, thinking the market is gonna go up because every gap the market always go up depending on the trend of the market. But it's like a downtrend. But it's okay. I took a trade on Silver USD, right? That was last week, right? But it was a good trade. Why? It's going to daily time frame. Let me show you what happened. See, in the daily time frame, it looks like an M pattern, right? Because it's like the market just changed in trend here, went up and it's going down, right? So, say to myself, right, let's take the bearish, let's take a trade going down here, what, right? So, see what happened here. The reason why I take this trade is because first of all, I saw this candle engulfing this candle here. If you get what I mean, looks like a bearish market already because this candle actually engulfed this candle here. If you know what I mean, because like in the market as well, this candle actually engulfed this candle. But I said to myself like, now at least let me wait for a bit. Let me see more confirmation in the market. So I said to myself, let me just wait. So I waited. I saw a strong bearish candle coming out from here. I said to myself, and enter it straight, because it's the same thing happened here last week in USD, right? It's like I saw like a little liquidity up here, like you can see what I'm doing, guys. So the market, I saw liquidity up here, so the market came and give us a little bit of like taking out the liquidity down here, up here. If you see, the market come on, take us the liquidity up here. Got any top bottom here, you know, double top, it's a double top here. So I took an entry from here, right? So it's how it dropped down and it was a good sale for us for the whole trade for about 2 days, right? So I'm actually like a swing trader, trade like for 2 or 3 days. I hold my trades down, See, I rather like get a fast loss, better just if my trade is not going the way I want it to go, better just get it out immediately than be staying losing trade. I don't want that. Better just be out than to be there in the market for a long time. Just the market should come and shoot up. No, no. I make sure that my stop loss is very sharp, very small and tiny. Then my wins are actually long and beautiful, if you know what I mean. So let me look for some bearish candlesticks, bearish candle pattern. You can see this one here is a bearish candle, it's a bearish engulfing pattern already. Because why? This 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 candle engulf this candle. So it tell me that the sellers in the market and you drop down, if you know what I mean. So look at this. Let's find another bearish engulfing candle. See, let's see this one as well. This one is a bearish engulfing candle. If you know what I mean, this candle is bigger than this candle. If you know what I mean. So guys, try and go and do this in your spare time. If you know what I mean. So market even sometimes you get it, sometimes you might see lows because a market that you must lose in order to win. So, but make sure that your loses money management is very important so that you can actually manage your money and everything you do. See, so let's find out bearish engulfing candle. So there's another one here as well. See this candle here, this candle, engulf this candle. If you know what I mean. Let me try and highlight these candles, man. So you see this one. You see a bearish engulfing candle. If you know what I mean. So it's something that you have to just pay attention to. If you're actually back testing, you can actually get this thing done. Bearish engulfing candle here. So guys, make sure that you pay attention to what I'm telling you guys. Try and watch the video more and over again. And the more you try and do this, the more you get better. The more you backtest, the more you look for bearish engulfing candles, you're gonna get better and get better in whatever you're doing, if you know what I mean. So don't worry, everything takes time. Don't rush the process. Keep backtesting. Keep trying the bearish engulfing candle. Keep trying the bearish engulfing candle, guys. Go right now to your charts. Try the bearish engulfing candles like this one. Try them, look for them. So your eyes can get used to looking for bearish engulfing candles, if you know what I mean. It's only like a bearish engulfing candle, but it doesn't look because it's a bit bigger, but it's not look good, right? It doesn't look really good. It doesn't look like a strong and bearish engulfing candle. You need to look for strong bearish engulfing candles, if you know what I mean, to give you a good sell. Like this one looks like a strong bearish engulfing candle, if you know what I mean. So guys, go and look for those candles right now and just retest, retest, try. Take care, guys. Bye.